Today, we're going to be talking about 3 news stories and then looking to put on some trades or maybe even take some trades off. We're going to talk about the first U.S. bank that's collapsed in the U.S. in 2026, and it may not be the last one. We're going to talk about the de-risking has begun. It's a 10% market crash next. Then we're going to talk about Tom Lee is the crypto market bottoming right now. So if that sounds good, I am a professional investor. I am competing in the U.S. Investing Championship, and I'm here with my friend Joe. Joe, let's watch these news stories together. And maybe we can learn something. Maybe we can learn something and apply them to our trades. Let's get going here. All right. So the first one up is first U.S. bank collapse in 2026, and it won't be the last.
Subscribe or less, so I would love to see you there. The first U.S. bank failure of 2026 is now official, and while it might be too early to view this in the context of a systemic shock, it is a very important signal that is worth paying attention to. On Friday, regulators in Illinois shut down Metropolitan Capital Bank and Trust that was based in Chicago's River North neighborhood. The Federal Deposit Insurance Corporation, the FDIC, stepped in immediately. This is the first bank failure in the United States this year and Chicago's second in just 2 years. If this sounds familiar, that is because the process followed a well-worn past 2008.
Well, let's talk a little bit about this, right? So she hasn't specified why, and I truly do not know why yet, but I used to work in consulting with credit unions. And so I would work directly with credit union CEOs, CFOs, all the C-suite. I actually am a finance bro, unlike every other jerk on YouTube who has no idea what he's talking about. And I went through this with multiple institutions that I worked with. One of them specifically in Atlanta is no longer. The NCUA, which is the FDIC for credit unions, came in and they're like, no, goodbye. And what happened at the end of the day, their biggest problem, which is why I'm curious to see if she talks about what the biggest problem was, their biggest problem was their loan losses. So they were in the Atlanta area, and apparently they gave loans to literally anybody with a pulse. They even were giving them to people with 4 legs and 3 hands, and I don't know what people were doing over there. As long as they had a pulse, they're giving them a loan. And they weren't paying them back. Joe, the average loan loss allowance, or the average delinquencies, I should say, for a financial institution is around 1 to 2%, right? Their delinquencies were over 10%.
Oh,
right?
wow.
That means for every dollar they lent out, 10 cents was delinquent, right? You're not going to be able to make any money as a financial institution like that. But then there were some other banks, including Silicon Valley Bank, that their issue and why they closed down is because they had gone too long on their investments. And I talked to I knew 2 institutions, one in Texas, one in California, that nearly had the same thing happen to them too. They had similar investments that they went out way too long in duration trying to capture yield. Finance bro Chris on the line here, Joe. They went out too long to capture yield. So for example, at the time, you could have gotten a 10-year investment. Now, institutions actually make investments, right? Like you would go to get a CD, they would do the same. Okay. But a lot of time it was mortgage-backed securities, which is everything around the Big Short movie, collateralized debt obligations. Anyway, they would go out and rather than getting a 10-year security, they would get a 30-year security. And for them, it's like, I'm making an extra 30 basis points. It's fine. But basically, you're locking up your money for 30 more years to make 30 cents on $100. Okay. We're talking scraps. And what happens then is your investment, if you bought your investment for $100 and you went to go liquidate that investment because investors or depositors came saying, hey, I need my money back. And you're like, hold tight. Let me go sell off a couple things real quick. And I got your money. No problem. Let's say that you bought it for 100 and interest rates have gone up like they did. Now your investments may be worth 80 cents on the dollar, 70 cents on the dollar, 60 cents on the dollar. And now it used to be $1 billion shop. Now you're a $500 million shop, but everybody has deposited $1 billion. We got a big problem, Joe. We got an enormous problem, Joe. That's exactly what happened a couple of years ago, is they went far too long in duration. And I specifically know 2 that came really close. In fact, I remember talking to the CEO of the one in Texas, and because I actually am a finance bro, the CEO, he called me, he's like, Chris, I'm absolutely sick. Every single day, the regulators are coming in telling me I have to sell off these investments, and I'm taking actual losses right? Like you would in a portfolio, right? If you know you're selling off your stocks or whatever, I'm taking actual losses of $1 million a day.
Whoa.
Yeah. And he had to get through $50 million worth.
Wow.
Yeah.
Ouch.
Yeah. All right, let's keep going. I'm curious to see what's going on over here.
Playbook. Metropolitan Capital did not collapse into chaos. We didn't really hear much about it at all. Customers did not lose access to their money, and there was no panic-driven run on deposits. Instead, the FDIC arranged a purchase and assumption deal with a Detroit-based First Independence Bank, which will reopen the failed institution as one of its own branches. So it was quick.
That doesn't sound like a bank collapse. That just sounds like M&A. Mergers and that does not. Why would anybody say that this is bank collapses? It sounds like literally mergers and acquisitions, which is super common in the finance industry, right? The bank that I personally use has been merged like 3 or 4 times. Right? Has that happened to you, Joe?
I had a mortgage sold, but never the bank that I use itself being merged. No.
Yeah, this is super common. I can't imagine why this is a thing.
Easy and very, very quiet. From the customer's perspective, the transition is designed to be almost invisible. It is designed to be that way for a reason.
Again, what is the news story here?
In deposits. So it was small, no questions about that. Regulators cited unsafe and unsound conditions and an impaired
Oh, here we go. Here's some details.
capital position as the reasons for shutting it down. Now, that language is very deliberate. It is very, very cautious, and it is very serious. It means that the bank's financial health had deteriorated to a point where regulators no longer believed it could operate safely without risking depositor funds. Now, the FDIC estimates that the failure will cost its deposit insurance fund approximately $19.7 million. That is not catastrophic for the system by any stretch of imagination. It is true, but it is not a trivial amount either. This is how it starts. It starts very slowly, very quietly, and then all of a sudden, they will be talking about systemic risk. Every bank failure draws down a fund that ultimately exists to protect confidence in the entire banking sector. That's how this works. What's important to note here is that Metropolitan Capital wasn't a brand new institution. It actually opened back in 2005. It existed for 2 decades, and it expanded its client base across 46 US states and 10 countries. In addition to its Chicago office, it maintained a presence in New York. It looks like a small but very ambitious player, but in reality, size can be a disadvantage when economic conditions tighten, when they become worse. And this is where the broader context matters. Higher interest rates over the past few years have reshaped banking risk in subtle ways in the United States. Rising rates can improve margins on new loans, yet
Great point. This is what I was talking about here. Rising rates are great for a financial institution. Unless you locked in the low rate for 30 years, then you're screwed. And that sounds like may have been the case here as well.
yes, but they also depress the value of existing assets, especially long.
Yeah, there you go. Depress the value of existing assets. That's specifically what I was talking about, Joe. The market value of those assets got tanked because of rates going up. Okay, now I got to the reason why. So this is not an uncommon thing, and it is 100% management based. Every single bit of this is because somebody working there was like, "Yep, let's do it." It was not outside forces. It was not the depositors doing anything wrong. Nope. It was somebody there saying, "I think we should go." In theory, this is exactly what happened. I think we should go longer term to get to higher yield. But if you look at the yield curve, actually the shorter term is the higher paying one of the two right now. So yeah, no, this is 100% completely preventable, but it may have happened multiple years ago when interest rates were lower, and now it's catching up to them. I think that's exactly the case here. All right, cool. Let's go to the next story. Warning, the de-risking has begun. It's a 10% market crash next. I don't know. Let's see.
Buddy, welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, as always, we're going to focus on the charts and the data. No hype, no BS. What we're going to look at first is where the markets are, because this weekend was wild. Last Friday was wild. We saw silver and gold collapsing. Silver and gold, believe it or not, gold got as low as 4,400 overnight here last night. Silver got down sharply as well. Both have recovered off the lows, but the card.
What are they looking like right now, Joe? I'm just curious. Silver's up 2%, almost 3%. Gold is down 75 basis points. But a big wick on gold right there. Very huge wick on gold.
We'll watch and look at the charts. Is it over? Is the buying opportunity here at last? In addition, over the weekend, Bitcoin started to cascade lower, getting below 75,000 before recovering a little bit today. Now, my biggest concern here is that if you follow the trend, what we're seeing is risk assets, silver, for instance, the parabolic move in silver unwinding, Bitcoin continuing lower. The question is, do the charts tell us that the stock market is next on the list? Let's get into the markets here today, folks, and take a look at the S&P futures. And as we do, what we see is the markets overnight were down sharply. In fact, if you look at the distance of the drop, right, if we look at where the S&P closed on Friday to where the futures were overnight, we were down 1.4%. Now, we have recovered, and we're only...
Yeah, so that was last night. We're actually up on the day, 58 basis points, 60 basis points or so.
Going to open down fractionally on the day. So not a big drop here, but it was nasty overnight. By the way, the S&P drop overnight was coexisting with what we saw in Bitcoin, where it fell.
Joe, I don't give any credence to after-hour trading. I know a lot of people do. A lot of people do. But at the end of the day, none of that after-hours noise makes it onto the chart. Now, remember, charts are not magical. They're just the history book of what happened. Now, there are times where it gaps up or gaps down, right? And a lot of that can be seen in overnight trading. But I don't know, man. I feel like somebody who puts a lot of effort into what's going on in the after hours, I think either they're insecure in their position and they want to see that that movement to kind of help them sleep better at night, or the opposite. They're so insecure in their position, they can't sleep at night. So they got to look at the position overnight. And it's like, if you got a plan, it's just going to do what it's going to do, right? Just go along for the ride.
They could be a futures trader too, though. They could be well into what the market is doing of all hours of the day. He started this.
I'm not talking about those guys, Joe. Yeah. Those guys are degenerates.
Yeah, he started this video out talking about a crash of 10%, right? And I was just looking through SPY. When was the last time that happened? And I think in COVID there was one day where there was a big candle like that. But
well,
I mean,
maybe not an overnight 10% crash, but maybe he's talking about like recent highs to lows, because we definitely saw something. When was this? Last April, March, February timeframe. We saw a big pullback. It was 22%, but it didn't last more than like 38 seconds before it came right back up.
Now, but an outlier is not going to let that happen because they're going to see the trend change, right? So that's why I was focusing in on a single candle or a single day drop.
Wait, Joe, are you saying that you can see the direction of the market, but you can't see the magnitude or duration?
I can, and all outliers can see the trend of the market and when it changes.
That's so weird. I wonder if there's a mathematical way that always works because it's based in math, that doesn't need any sort of YouTube disclaimer whatsoever to tell you the direction of the market. I wonder. Probably not. I mean, you guys could put it in the chat if you could think of anything in particular that might tell you this, but I don't know. I just don't know. But Joe, I want to see what he has to say, though, Joe. Let's see what he has to say.
75,000, and then also where silver and gold traded sharply lower. Now we'll look at those charts in a second, but first let's go to the S&P 500, because this is really what I'm most concerned about, right? You talk about silver, yes, huge drop. You talk about Bitcoin, big drop. But if the stock market starts to have these type of moves, it's going to send shudders through the economy. Right now, I think we can all agree that the silver drop, again, it takes away about 2 weeks of gains, maybe 3 weeks. Bitcoin, it's not really affecting the U.S. economy. But if the stock market has a 10% correction, you better believe it's going to affect the U.S. economy. So looking right here, what do we have? We have a warning sign on the S&P 500. Why? Well, because you can see the low here from...
I personally don't like trend lines, because I feel like you can... Well, I mean, why is he picking that spot instead of that spot, right? There's too much subjectivity here.
I was just thinking the same thing. I'm like, How did he decide how many of these lows he's going to connect and which ones he's going to connect?
Yeah. In that case, why not connect over here?
Yeah.
Why not connect right there? Why not connect? What I saw was what you saw too. Why not go off of these? And in that case, we're good, right?
Mhm.
I don't know. Trend lines are too subjective to me, but let's keep going.
April, and then we have the bigger parallel that's been going on since COVID and the low. So 5 years ago, we've now broken below on the daily chart. We've retraced to the scene of the crime, and we've started to drop. Now, you could get a small bounce, but if you looked at 100 of these setups, about 70 of them have big moves to the downside. And so again, it doesn't guarantee anything. Nothing in technical analysis is guaranteed, but probability-wise, it strongly favors the downside on the S&P. Now, what would change my mind?
All right, let's do a vote. Let's do a vote. If you think the market has topped and it's going down, put a thumbs down emoji in the chat. I'll use one as an example. Okay. If you think the market has topped or has not topped and it's still going higher, put a thumbs up emoji in the chat. I'll do another one as an example. All right. Now, I'm looking for you in the chat to tell me what you think. And base it on whatever you want to base it on. I don't care. I'm just curious what you think. I'm trying to read market sentiment right now. That's what I'm doing. I'm trying to read your guys' market sentiment.
Very simple. Anything, if the S&P could confirm above this level, both the white trend line and the yellow trend line, all of a sudden we'd be in price discovery mode and in breakout mode. Until then, whatever we do here, ultimately the path of least resistance is to the downside. Same thing, by the way, on the NASDAQ. We have
dude, that's a strong statement. The path of least resistance on the market is to the downside. I'm seeing all kinds of thumbs ups, thumbs downs, thumbs sideways. What's that supposed to be? But I'm also seeing a good lot of outliers, like Outlier Hold the Line, saying, we don't predict the future. Which, you know what, I agree with you guys. Right? Read what the market is telling you, and don't try to predict the future. Let's keep going here. A couple more minutes.
a very similar trend line from the lows of April 2025. We hit it once, twice, 3, 4, 5, broke down, retraced to the scene of the crime, and now again are being pushed lower. Now, this week's a big week. Let's do a quick pause here before we get into other charts. So we have Amazon and Alphabet reporting later this week, and we have the jobs data. So there's this big economic data and big earnings data. Again, if they're perfect all the way around, maybe that's the one chance the bulls have at pushing this market up above these key levels. But again, any sort of weakness, and listen, we've even seen good earnings and the markets have still sold the stocks, right? So we have to be aware that it really needs to be the best of the best to get this market to shake off the bearish technical setup that is favoring the downside here to get back into bull mode. All right.
You know what's great about the market, Joe, is that everybody gets to vote with their dollars, right? You get to vote with your dollars. I don't see this being a bearish setup at all in the market. In fact, correct me if I'm wrong, but we could have the highest close in the history of time on the SPY today. Never since Jesus has ever walked the earth could we be at a higher point than we are at the close today, unless I'm mistaken. Joe, is that a bullish or bearish thing?
Well, I mean, all-time highs are always scary, right? I mean, you should run away from them as fast as you can. No. No. But if you're getting higher and higher and higher, that's definitely a bullish trend, to answer your question.
Yeah. Super bullish, right? It's bullish AF because everybody who owns the asset ever and still owns it is going to be happy right now. And there's nobody sitting overhead waiting to sell out. Okay, let's go ahead.
I like Gambit's post here. He's essentially saying, he or she is essentially saying, look, this is just another tool that I have in my toolbox, listening to this fella. So as part of this person's plan, perhaps his opinion is included, right? And if you can pull off a high expectancy with this fellow as part of your signals, go for it. Go for it.
But you know what, Joe? It's leading to great conversations. We have some educational moments. And even though I don't agree with him specifically, he's saying that there's a lot more bearish than bullish setup out there, right? That's what makes the market, right? For every buyer, there's a seller. So I like it. All right, cool. Let's go to the next one. By the way, we're trying something new with these new segments here. So if it's not working, we'll figure this out together. But Tom Lee, is the crypto winter over? Is the crypto bottoming happening right now?
Did you use the word speed bumps or volatility, or I don't know what it was, but he also said that a lot of it could be based on things coming out of Washington, that the market was going to be held hostage to that to some extent. Is this worse than you expect?
Is this guy drunk? Like, he's mumbling like crazy. He's like, that Guinness was real good. Markets up or down.
Did somebody say Guinness?
That's a great idea.
Or pretty much what you were thinking?
Well, and parts of it have been much worse. Like, you know how I think the crypto market has taken it much worse than we expected.
Why?
Hang on. Let's look up Bitcoin. Someone tell me how to get to Bitcoin. BTC US dollar. What's the best one to use? Bitcoin futures? I don't trade Bitcoin, so I don't pay attention. Let's go Bitcoin futures. Oh yeah. I mean, that's looking pretty brutal, isn't it, Joe? What's that sell off from top to bottom here?
Looks like there's support there, though.
40% sell off. 40% sell off. Yikes. Yeah.
Actually,
Well, I mean, there could be some. Like, no, you're totally right. Like, looking at Bitcoin objectively, and again, crypto bros, by all means, welcome to the channel. I'm glad you're here. Subscribe. Look at the support that was shown from this one candle right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 candles. 23 candles bounced in this area right here before it finally fell out of it. That is why I say you got to watch for order blocks. You got to watch for those order blocks. So, okay, let's keep going.
I think part of it is the crypto industry doesn't have any leverage right now. It sort of delevered in October. And now when we have gold and silver doing so well, especially at the start of the year, that created FOMO. And that was like a vortex sucking all risk appetite towards the precious metals trades.
Oh, okay. So that's a decent thought, actually. And actually, one of the reasons why I wanted to do these type of videos. So he's saying, because I wouldn't have thought of that, crypto bros coming out of Bitcoin and into silver. I don't know what that correlation is, but it looks strong. I don't know what that correlation is, but it looks strong. Look at that, Joe. I think he's actually onto something here. Look at the peak of Bitcoin, October 25th, was right here on silver. I mean, maybe he's onto something. Wow, that's really interesting. What do you think?
It could be. I mean, you can definitely tell that they're opposing curves.
So I think crypto has suffered from that on a price basis at a time when the fundamentals have been good. You know, it's been a contrast. I think the broader economy is actually in good shape. So to me, the turmoil here is kind of what you said. There's a lot of uncertainty because of Washington picking winners and losers, and some of this could be the new Fed pick. But I'm also kind of heartened. I think gold and silver taking a breather is actually a good thing.
A breather. I mean, 80 on silver. That's not breathing yet. It's like I don't know what that is. You do point out that the consensus now is for the GOP to lose the House, and that is not necessarily.
Sylvia, on TradingView. So, Joe, here's the thing about TradingView. At least once a week, I found something I'm like, wow, that's so cool on TradingView. This could be one of those things. How do we do this, Sylvia? I do not know what you're talking. I don't even know what it's supposed to look like when I'm done. You said on TradingView, you can overlay charts, do silver and one over BTC. Okay. So do I do it like this? Do I just go SLV divided by 1/BTC? I don't know if this is going to work. I have literally no idea. I don't think it's going to work at all. Let's just find out. Holy moly, it worked. What is this telling me? Click a plus to the right of this symbol. Okay. I don't know. We're going to have to figure this out some other time. But that already is cool. Plus, Rick. Plus button next to the ticker field. This one? Oh, okay. Let's go back to BTC. Look at this, Joe. We're learning as we go. Bitcoin futures, and then
I'm always here to learn.
SI1 exclamation point gives us silver futures. Same percent scale. Yo, that's so cool. Hold on. I don't know. I can't adjust the chart. Why can't I adjust? I can't scroll. Why can't I scroll? I can scroll this side. I can't scroll that side. So silver is the green one that's like running off the screen. Yeah, I don't know if we're going to be able to get that to work, but I like where it's going. I like where it's going. We'll have to practice this more, not on a live stream. Okay, let's get back to this. Oh no, what have I done? Oh no, what have I done? Silver. Okay, let me take this off. That's okay. Okay. Let's get back to it.
Negative for the markets for the future because it's already consensus.
Yeah, I think it's consensus. It might actually be a positive surprise if the GOP keeps the House.
If that were to happen.
If that were to happen. But that's a
Oh no, talking politics. This is not good for our channel.
big if. I think one of the things that we're seeing, of course, this year is the White House is deliberately picking more winners and losers early, I think, because of the midterms. In other words, their agenda is front-end loaded. I think that has caused some turmoil in markets.
Even if it was Hassett, or I don't know who the markets would have liked, but you think no matter who it is, that the market tests the new chairman of the Fed when he's announced or she is announced.
We saw that with Fed Chair Yellen and Fed Chair Powell, that in the early days, the market tests them, whether it's their resolve around policy or rates. So I think the confirmation process creates a little uncertainty. And then I think the first FOMC meeting. So I think that's why the middle of the year could be quite bumpy.
Then you point out some things maybe to keep everyone a little bit grounded. Stocks were up the first 5 days of this year. Stocks are up 1% in January this year. Since 1950, that's happened about half, a little bit less, 36 times. That's 76 years, and the S&P was up 18% on average after a start like that. But I thought you said it. Someone recently said they don't even pay attention. I got it with David Bonds. They don't even pay attention to what happens in January. That indicator doesn't work. It's like the Super Bowl indicator. It's had its time and. You think it does? Historically, this is important.
Yeah, it's very telling. I mean, there's 36 times when it happened just exactly as you described. 33 to 36 times the market was up. The average gain is 18%. If you look at the non-36 instances, the other 34 or so, the market on average is down 5% for the year. So it makes a huge difference to do well.
Good. Did you hear that? So if the market's up in January 36 times, it's done this, and it's done great. I think he said 18% for the year. The other time, so and granted, his numbers may be off because he's in studio, so he's just reading off the off his cuff there. 45% down. That's not insignificant, Joe.
No,
maybe that's like at some point mid-year.
In the first week, in the first month.
A lot of this, obviously, the giveth and taketh away. AI went almost not like gold and silver, but kind of. I mean, asymptotic in a lot of those stocks, trillions of dollars of valuation.
Oh, he said asymptotic.
Yeah, I caught that.
Yeah. You ever heard a guy talk about the asymptotic slope of things before?
There's only one guy.
It was finance bro term. Look at this. All my finance bro juices are starting to flow now that we're doing this. So here's what we're going to do, Joe. We're going to shift gears. We're now going to go over to our trading plan for the day. Welcome to the OVTLYR Trading Room US Investing Championship invitation only live stream. This is where we help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already and you're watching the replay. We can talk about our plans. We have M and ETF. Both of those are active right now. And listen, if you want normal returns, this is not the place for you. But if you want outlier returns, now you're in the right place. So plan M is our most aggressive plan, but we have not set up any new plan M trades for a minute. And the ones that we did, they were working like gangbusters until silver started to act like a freaking meme coin and has gone all over the place. And you know what? All you got to do is have a plan and then just let the money fall out, right? In fact, there's a quote. I love this quote. If you diversify, control your risk, and go with the trend, it just has to work. Just has to work. I mean, mathematically, it just has to work. So first, before we do anything else, we need to look at our exit signals. So plan M exit signals. Let's start here. So we have two, let me refresh this. We have two option trades on right now. One is NEM, and you can see right here as we were tracking up with silver and frickin' silver turning it against us. Then we have OR, same situation right here, right? OR has a sell signal today. So OR has to go. NEM does not have a sell signal today. So we know OR has to go. What about 1020 bearish cross on NEM? Let's go take a look at that. Not today. I mean, If it doesn't bounce, if it doesn't find some more buyers to come through here, it could happen. I don't want that to happen, of course, but I don't have a reason to get out. I don't have any order blocks in the way. Don't have earnings just yet. Earnings are February 19th, my 40th birthday. Looking forward to that. No gap and craps. And then it has not hit our 2 ATR stop yet. So NEM stays on or has to go. And Joe, I'm going to have some extra cash in my pocket after I sell or. What should I do with it?
Well, I think you should consider looking at Plan ETF because we haven't looked at those signals yet. And if those don't work out, you could always look at Plan Sit in Cash.
That's true. Plan ETF though. SPY having a sell signal, that would be our exit. We're already in Plan ETF, so let's see. Nope, still has a buy. 30-day old order block being hit on the SPY. Let's go look at that real quick. No, not 30 days. It's getting a little bit older here, but we're looking at 21 days. Again, it's a very possible, super duper possible, depending on where it closes right here, to be the highest close in the history of time on the stock market. We'll have to see how that goes. 1020 bearish cross, not today. And then 3 ATRs above the 20 EMA, no. So I am still going to hold on to Plan ETF. So what I'm going to do is I'm going to go sell out OR. Let's go sell out OR real quick. And I need to make sure I do this in my personal accounts as well. I have 2 personal accounts I manage and 1 outlier fund that I manage. Let's go to the portfolio. Where am my money at? Okay. Clearly I need to close this and log back in. Give me 20 seconds here to do that. Close out, log back in. Joe, it's gone. It's disappeared like that bank did earlier. It's all gone.
Oh, if only it was insured. Bummer.
If only. Okay,
have you tried looking at healthcare? No.
No, never. Oh, yeah. There you go, Michael Ross, the boss. That's exactly what I was after. Right. That's exactly what I'm after. We might even be buying more S&P here. Might even be buying some more. While that's loading in, let's go check Plan M's entry signals. Oh, there we go. Finally. Okay. Or we need to close OR. So let's send to ticket. Joe and I are going to disappear for a minute. We're going to turn off chat. So we need to close OR, and current price is 298. So let's just hit send. And we can see that's still open. And let's go over to our orders. Might have to penny it down a little bit. Let's go 295. And we are filled. Average fill price is 295. Let's go update our portfolio, which this file is linked down below. So every trade that we take this year will be linked down below. So you can follow along if you choose to and see exactly what we're doing. As well as the PowerPoint that we're going through is also linked down below. You have no excuses this year. 2026 is the year where you change everything, but only if you make it happen. All right, let's see. We closed it at 295. We rolled it once for 377, and we closed it today at 295, which makes it a, oh, daggum, I did that wrong. That sounds great, but it's not the truth. All right, an 11% loss on this trade, unfortunately, but that's okay. Remember, losses are an unavoidable part of trading, just like winners are an unavoidable part of trading. So closed OR at 295, a 11% loss, and it was a 2% hit to the portfolio. That's it. I still have 98 cents on every dollar. In fact, in just a minute, we'll mark everything to market. Today is the 2nd. And we'll see just how we're doing. Okay, so next I have some cash. How much cash do I have? I have $4,269 of cash. Now, this account right here started the year at $50,000. And while it was up a lot more before frickin' silver decided to turn against us, right? We're still up on the year. Closing in on, I don't know, what would that be? 6-8%. So not too shabby for the first month of the year. Now we're in February. Let's continue on with Plan ETF. So Plan ETF. Our entry signals in Plan ETF are uptrend in SPY. So the way that you do that is you can look at the 10 over 20, price over 50. That is an uptrend. Or if you go into OVTLYR, you can actually see with even easier view when it has a green overlay in the background that it is a uptrend. Okay, so that makes it super easy. We have a buy signal on the SPY. The buy signal as of January 27th. The SPY heat map is under 70. It's at 56 right now, 56.0. So this is the fear and greed value of the SPY. This is the average fear and greed of everything inside the SPY. Okay. And this chart right here is what is represented by this on a daily basis. So the heat map is under 70, and it doesn't matter if it's moving up or down. And then lastly, we need to, well, not second to lastly, we need to see if it is inside the value zone. So you can get the value zone indicator from our Discord, and you can just pop it on like this, and yep, it's inside the value zone. That looks great. And then the very last thing to check is if it has a 30-day old order block. We already talked about this. This is a 21-day old order block. So I can ignore that order block for now. So you can, at any point in time, take the trade, which means I got cash. This is set up. I'm going to go buy some. That's my plan, Joe. That's my plan. So how much am I going to buy? So I have 42.69, and the current price of SPXL is 231.25. So 43.69 divided by 231.25 means I can get one. Oh, I did that wrong, didn't I? Keystroking all over the place here. 4369 divided by 231.25. There we go. 18 more shares. All right, let's go buy some more of SPXL. So I just come down here, drop off Joe in the chat, and we're going to go to SPXL. And I'm going to go to equity. I'm going to buy 18. And then I'm going to do a market order because it's super liquid. I don't have to worry about it. We're filled on that for 231.21. So I'm now up to 223 shares of SPXL. And let's go update our mark to market real quick. And then I will take a song break to go and update all of my personal account information. So, or we already closed. We just purchased more SPXL. That's all we're doing today. On the bottom is a stock calculation helper. And so what I like to do over here is every time I make a purchase, so like 226, 226, and I purchased how many orders? 18 at 231.21, 18 at 231.21. Okay. Now, if I were to liquidate this, 226, I have a total of 223 shares, 223, and the current price is 231.31. Okay. So if I go back to the main portfolio, now our weighted average, because that's what we just calculated here. I made this for you to make it easy. This is Finance Bro speak. Your weighted average cost versus weighted average proceeds, if you were to sell it, means that on SPXL, we're down 34 basis points. All right, no problem there. So that's how much we got in at. This is how much it would cost us to liquidate at. So let's go mark NEM to market real quick, which is at 362. Take this to market plus 362, which means total year-to-date returns are 7.15%. I'll take it. Joe, what's the average annual year-to-date returns for, or full year returns for the market? I feel like it's somewhere like 8 to 10.
8 to 10, yeah.
Yeah. I don't know. I feel like that's pretty good since it's the second day of February. Now, it's not what it was before frickin' silver turned against us, but still, we're on the right path. We're on the right path. Joe, my retirement advisor said to expect only 6%, and you will like it. Yeah, I don't know if that actually happened to you, Ziggy Narwhal, but the guy we talked about earlier who was asking like what's going on with silver and whatnot, he's the same guy. His name's Will. He's the same guy who his financial advisor specifically said, hey, you're going to get 6% returns forever. Get used to it. Joey did better than that in 1 month. In 1 month.
Yeah, in 1 month. Yeah.
In 1 month.
And I mean, the expectancy says if we get a lot of trades this year, it should go higher than that. We'll see. We'll see how it plays out.
And that's the thing, right? Is that expectancy is key, right? When you have a plan, you've, in fact, let's take this opportunity to go to click the button over here to get to the playlists. In fact, we talked specifically about sharing your screen, you stinking professional YouTuber. In OVTLYR University, we specifically talked about developing a plan and coming up with your expectancy. And your expectancy doesn't have to be, or shouldn't be 1, 2, 3, 5 instances. You need at least 50 occurrences, And And then you can start developing what that expectancy looks like. In fact, let's go to our expectancy right now. So our expectancy across the entire portfolio, when we use our win rate, our average win, average loss, gets us 6.29%. But Joe, those numbers are a little bit fudged. And I don't love it because they're a little bit fudged, because it blends in the sit and cash, and it also blends in plan ETF. So scoot over here. Now we can really see what's going on. So plan M's expectancy is 10.2. Now we're talking. Plan ETF's expectancy 0.84, and plan sit and cash is at 0.03. So now I can say, mathematically speaking, all three of my plans are clicking. And that is what you got to have. You got to have the data to support your trading plans. There's no trust me, bros. There's no gut feelings. It's when you have the data, when you have a plan, you can be a successful trader. Andrews is up 31% the first month. I got to tell you, Joe and I were talking the other day, because both Joe and I are competing in the U.S. Investing Championship. Why could they not have had the stupid silver collapse happen February 1st? That way we could have had our names up on bright lights on the U.S. Investing Championship leaderboard with like crazy returns. I think my account was close to like 56% at one point. That would have been so much better.
Yeah, that would have been awesome. I think the highest I got was maybe 49 and change, but oh, the timing was awful on that, man.
Dude, no joke. Senior Wahoo, one of the Bravo students, says, I sent my statement to Norm today. Let's go. I have it on my list of things to do today. Let's look at the list of things. Oh yeah, make 2 live videos today. Let's see what else. Work on coming up new content for you guys. I'll get to it. But yeah, I definitely want to make sure I don't miss out on that. That is definitely, let me make double sure. Norm. Yes, so Norm Zada, Dr. Norm Zada runs the competition. What? He's full of baloney. There's no possible way, except maybe it is true. Yeah. Outstanding. And that's why I said, Joe, I'm no longer taking the position that I'm going to win the U.S. Investing Championship. I would much rather have you guys beat me. As awesome as that is, how cool would that be to have the student beat the teacher? I am all down for that. I am all down for that.
And one of those university students, whoo, he is good at trading, man. I think he's going to beat everybody, but we're going to see.
Dude, you know what's great about that? And I'm not going to name names, but he and I chatted before he started class, and he was saying what a blessing it was, because he really hadn't ever been in the markets like this. And now look at you. Look at you. Yeah. Now look at you.
He's doing things that people dream about. I mean, doing half of what he's doing, people dream about. Like it's pretty awesome.
That is really awesome. Joe, if somebody were looking to save time, make money, and start winning with less risk, what do you think they should do?
I think they should become an OVTLYR subscriber for 82 cents a day. But if they're not comfortable yet, they just go to OVTLYR.com, get a trial account, and then catch one of these videos to learn more.
Yeah, do one of them 2 videos. Joe, I had a thought. I had one of those shower thoughts today before we get out of here. If somebody saves 64% off the regular monthly price, right? How much does that mean that they save? Let's pull up a spreadsheet here. I'm actually just curious. So I was thinking about this in terms of months. How much would they save? So the annual price of OVTLYR is $2.99. Okay, which equals like $24.92 a month, I think. Yeah, there you go. It's almost like I've done that before. $24.92 a month. The regular monthly price is $69. Okay, so 69 times 12 is 800 and change. Yeah. So how many months would you get for free? So you would take this minus this, then you divide this divided by this. You get 7 months for free. That's actually really cool. Almost 8 months for free. That's really cool. Nearly 8 months of OVTLYR for free when you upgrade to the annual pass from the monthly. Okay, that's a sales pitch. Chris got to use that. Okay,
that is really cool. Now I'm even more satisfied that I went straight out of the gate and bought it for an annual subscription. For me, honestly, I was like, I mean, for $300, I'll take a flyer, and I am so glad I did.
I think, Joe, you made back just a smidgens more than that.
Yes.
All right, now you guys click one of those 2 videos. You'll have a fantastic day. We'll talk soon.